Manish Sonthalia, Senior Vice President, Head of Equity PMS at Motilal Oswal AMC, joins us from the sidelines of the 10th Annual Motilal Oswal Global Conference. Manish, good morning and thank you for joining us. Before we talk about specifics of the conference and the moot point, let's address yesterday's big story. The Supreme Court has called all the coal allocation illegal. Market reaction was swift. Metal stocks and power stroke mining stocks, they corrected very sharply. Do you think yesterday's market reaction in some of these power and mining stocks was overdone?
Not really. You know, if you look at the verdict, it is impacting your JSPLs, Hindalcos and Sesa Sterlites of the world the most. But if you look at the sum of the parts valuation and the ticker prices that you see of these stocks, I don't really think there's too much of downside from these levels, even if you were to assume that, you know, the coal allocation was to be done away with, or they will have to bear some penalties, etc. But let's say at around 255 rupees on a JSPL or a 165 rupees on an Hindalco, and similarly on Sesa Sterlite, there's still a margin of safety, you know, that is available in these stocks. Of course, the Supreme Court has stopped short of deallocating the coal blocks. Obviously, there's going to be some solution, which means that I really don't think there's too much of downside in these names. Sentimentally, it could be that way, but fundamentally speaking, don't really think there's too much of downside from current levels.
So what becomes a buy then, Manish, at the current levels, or are these stocks not a buy even now?
Well, I wouldn't venture out to buy these stocks for the simple reason that let's first hear what is happening on 1st of September when the Supreme Court was to decide as to how you're going to regularize these coal allocations. And second of all, to have a finer, you know, account of how much of an impact it will have on the P&L and the balance sheets of most of these companies. So give it a pass for the time being.
So tell us more about how the conference's day one panned out, Manish. We understand that Mr. Gadkari has vowed to add 2% from his own sector to the GDP.
Yeah, you're right. In fact, he's talked about investments, you know, adding up to 200 basis points on the GDP. One thing which he talked about was, you know, a very big impetus on highways and roads. And the fact is that he's also wanting the cement players to actually have a very reasonable pricing as far as you know, the construction material for this road building is concerned, because obviously the cement players have you know, increased prices post announcements of that 20 or 22 kilometers of roads per day. And I think that's going to have a bearing on the cost of you know, making these roads. So I think there is an intention to have a large allocation to the NHAI projects or the, you know, 2-laning on 4-laning, etc. But cost of raw materials should be kept down. I think that was the crux of his you know, speech that we heard yesterday.
Manish, I'll also like to draw your attention to the banking sector, because the banking sector has a very large exposure to some of these power and power mining stocks. This sector currently is suffering because cash flows are not there, and Supreme Court order will only intensify problems going forward.
Absolutely, no doubt about it. First, you know, you had this Supreme Court ruling that Adani Power, Tata Power not allowed to raise tariffs. Then you have the Supreme Court judgment. You know, I reiterate, this whole power sector is in such a big mess, and the rub-off impact is going to be there on, you know, public sector banks, surely. The public sector banks are surely grappling with a lot of NPAs, and there's no end to it. But if you have incremental negatives in the power sector, what we saw yesterday is only going to make matters worse. And just, you know, we have to tread very cautiously as far as investments into public sector banks is concerned. So clearly the banking space, it's the private sector that one should be focused on to.
Manish, what have you made of the CCI penalty on some of these auto companies, the likes of an M&M, Tata Motors for that matter, because they too have been finding favor, as have been the auto ancillaries. In fact, auto ancillaries are the ones which are, sort of outperforming even the major auto companies. Does it dampen the spirit for them at all, or would you continue to buy if you do get dips?
The going is very strong for the auto companies. This CCI order obviously is going to get challenged and will get fought till the Supreme Court. So, the best you can do is take an NPV of the ultimate liability that is going to fructify. So, I don't really think it's going to have any material impact just because the announcement has come from CCI. It's going to get challenged all the way up till the apex court.
Manish, Edelweiss report this morning seems to be arguing that even if Hindalco has to buy coal at current market prices, the EBITDA impact could be about 5 to 7%. So going by that logic, is it a good time to buy into Hindalco, which is not a power company, it is a metal company? Manish, is my voice reaching you?
Nikunj, is it for me?
That's right, Manish.
Yeah, okay. Okay, so I think what everybody is building in is a 25% coal from the Mahan smelter as well as the Aditya smelter building into FY16 numbers. So the difference between the mine coal price as well as and the market linked price is going to be the impact on the EBITDA of Hindalco. So to speak, the 6 to 7% impact on EBITDA is roughly a correct number. And to that extent, it's already getting built in, as we've seen a correction of around 8-9% yesterday and even today. So I really don't think there's too much of a downside in the case of JSPL or Hindalco if you strictly go by fundamental and the impact that they would have on the P&L account as we speak today. What's going to happen on 1st of September, we'll take it up then. But as of now, everything is there in the prices.
Mahindra is also looking strong. And Manish, I know that you own Tech Mahindra. You've liked the stock in the past, but at the current juncture, closer to 2300, 2400, is Tech Mahindra priced to perfection?
If you say that for the next 6 months, 9 months, maybe yes, 2300, 2400 may be a full price. But if you're looking at a slightly longer term, you're looking at a telecom spending reviving on a global basis. The dollar revenue growth is going to be a bare minimum 15-16%, have a propensity to get upgraded to 17-18%. EBIT margins will stay at around 15-16%. So you don't see a further negative surprise from what we saw in the last quarter numbers, and valuations are very, very reasonable at around 13-14p. I mean, that's the whole argument, that for a 25% plus ROE company available at a 13-14p and all segments of the business, particularly the telecom side of business, starting to look up, which is roughly around 50% of the total revenues. Still maintain that Tech Mahindra has a long way to go on the upside.
Manish, what really could be a big drag for the market? Because so far, markets are reacting to good news, and every time bad news is coming out, markets are making an excuse.
So I think if there was to be a serious correction in the market, it was come out from the US increasing rates faster than expected or earlier than expected. Obviously, tapering is ending in October. There is going to be heightened degree of liquidity tightness that you will feel even in India. How the central bank, that is RBI, manages the liquidity situation needs to be seen. But this will be a phenomenon as we enter the third quarter, post-October. So November, December could be a correction-prone timeline, and possibly that would extend even into the first quarter of next calendar year. So I think any correction, any serious correction would come from global developments.
So what about the near term then, Manish? Does it seem like 7950, 8000 thereabouts is the peak for this calendar year, or do you think the market can, does have that chance of going significantly higher as well from these levels?
My own sense is that in the run-up to Diwali, you are looking at 8,500 on the Nifty, and possibly after that you are going to see some correction. So somewhere between 27,000 and 28,000 is where you would settle at around Diwali time. I also happened to speak to a lot of consumer guys, the guys who are into white goods as well as the FMCG guys. I mean, they are looking at a turnover increase of 25% this Diwali as opposed to the previous Diwali. I'm talking about the white good players. And even the mood within the consumer sector is quite upbeat. So my own sense is that markets are headed higher before we ultimately see a correction. I think consumer as a space will be the best performing sector as we move towards the end of this year. Particularly so because people have been clamoring about a whole lot of elevated valuations on this front and under ownership in this space. But believe me, the earnings growth is really going to surprise on the consumer pack, and that's not priced in as far as
Manish,
estimates on the numbers.
Manish, I like your glass half full approach. But let me challenge your bullish argument with just one thesis, and that's an easy thesis. Government paper. It will be SAIL, ONGC, followed by Coal India. What happens when billions and billions of dollars of government paper will hit the market? It will dry up or suck out all the liquidity.
What about an LIC talking about a 50,000 crore equity investments? Where do you factor in that? So, these government papers have a way to get placed, and you know it and I know it. So, but if the government announces subsidy reforms a proper way, I think there's enough appetite for an ONGC paper even within the foreign institutional investors. They are waiting for clarity on issues, etc. So if you talk about Coal India, if you talk about an ONGC being a drag on the markets per se, I wouldn't really subscribe to that. Have clarity on issues, and these papers will fly even with a lot of appetite from the foreign institutional investors.
You should just talked about the consumer space. Give us two names that you really like from there and one can still buy.
We recently bought into a United Spirits in our portfolio post the Diageo offer. So if you're really betting for the long term, this is one name that we have included in our portfolio. We have the likes of Emami, the stock is doing really well. The segments which they have entered into, they've already taken market share in the feminine hygiene segment. She and he, both these products are doing really well. Apart from the 4 power brands that they have, except for one, all the rest of the 3 are doing quite well. So at 25% top line growth and 18% bottom line growth in this sort of an environment, you have a festive season which is coming through and which is longer than the previous year, should augur well for these companies, I would think.